Hey traders, Raghee here. Let's take a look at gold and talk about what's next for gold. Now, the bullish bias that I continue to have on gold is largely predicated on the fact that we still remain above the 200 exponential moving average, but even more basic than that, I think one of the easiest things that we as traders can do is always respect and know the difference between trending markets and markets that are chopping. And then when the market does go into chop, do something that I'd call respect the trend that was, and that's this right here. And that trend is going to still emphasize oversold buys in gold. All right, so this has steadily been the approach we've had since the transition from trend to chop in gold that happened specifically at the end of September, and then focusing on the 1480 to 1450 area, depending upon volatility and support, to get long. So then we've talked a lot about the entry. What about the exit? What are upside targets? Now, upside targets can really be determined a few ways. Well, one way to do it would be to understand that the closer we get to a +2 standard deviation, and this is a standard deviation measuring price and the volume weighted average price. So the price in VWAP, which is what this thing that I call the V-score. Now, V-score is an utterly made up thing. This is something that I started doing about 20 years ago, where I would manually calculate the standard deviation of price and volume weighted average price. And now we can just graph that right on the chart. So the closer we get to a +2, the more exhausted we get, the closer we get to a +3. So that's one way of looking at it. Another way of looking at it is with previous support and resistance. Now I have a Darvis level showing that we might have some resistance up at this area here. So I can certainly keep an eye on the 1525 area as well. And the last way that I look at these things is via price movement ranges. And we look at the daily price movement range for gold. Now, this is something that I call the DPMR and HPMR, daily price movement ranges and hourly price movement ranges. And these are historical volatility measurements coming straight from a site called AutoChartist. And this is what I overlay on my charts. I have for many, many, many years. So we take a look at the DPMR, the daily price movement range, and I look at the typical price movement range on the upside being somewhere north of 20 points for this session. Now, if I get a move from high to low in the vicinity of about 20 points, then I know that's a fairly exhaustive move. So that would mean we'd have to be somewhere around 1508 before I would say, hey, let's just go ahead based on the DPMR, take some profits. We're a little shy of that, but also remembering that this is a holiday affected trading session. We're trading on the lower end of the range, but I would not be too apt to get out of gold today. I'll probably wait to see what kind of price action we get on Thursday, and the closer we get to maybe an up 20 point day and or close to 1525, I'll look for that target. Not to mention, again, closing in on that point, really the 1.66, 1.65 area on the V-score and even a +2. So I'm still shy of my targets, but let's look for more upside in gold. We've been patient. We've been building that long position via GC futures, MGC micro, GLD calls, GC calls. And so all that's coming to fruition. And this is how we're going to manage that T1, that target 1 expectation. Have a Merry Christmas, gang. Those of you that are celebrating Hanukkah, I know it started a couple days ago. Happy Hanukkah. Thank you for listening. Thank you for your time as always. And I'll see you in the next update.